This is Eric Muathe with Muathe.com. All is well. Let's take a look at the markets here as we come close to the conclusion of this week's trading. You can see markets are still trading as far as the S&P 500 and the NASDAQ are concerned, pretty much trading at all-time highs. And we shouldn't be too surprised, especially given that as of this week, we saw the NASDAQ move its daily RSI above 69.1. The NASDAQ's been holding its weekly RSI above 69.1 since about August. So that's another time frame showing strength. And of course, the monthly chart continues to be holding above 69.1 since about middle of June. So this market has been strong, especially as far as the NASDAQ is concerned. And of the major averages, this was the first instrument that recorded all-time high. And again, as long as we are trading above that threshold, the RSI sign of strength, as long as the market is above 69.1, this continues to be a very stable to bullish market. What that means is that as long as we are holding above this number, then markets can have pullbacks. They are going to be quick. They are going to be shallow. Ultimately, the market should be moving higher, or at the very least being stable around current levels. Now, on the monthly for the S&P 500, it too is recording all-time highs. And we can take a look at a longer view. And we can see, yes, this is a strong push to all-time highs. And also, we're going to continue watching the RSI to see how it responds from week to week. Now, let's remember, since we see the NASDAQ already at all-time highs, S&P 500 has followed through with the same move this month of August. We should not be surprised to see the Dow move to all-time highs in the coming week. Now, as far as the Dow is concerned, we can also use the confirmed monthly closing high from December of 2019. And so let me give you that number. It is 28538.44. So if it can hold above this level, that's what the bulls want to see. And those who are bearish would be encouraged to see the market fail, as far as the Dow is concerned, fail to hold above this number. Of course, a failed breakout can be the cause and the reason for a pullback. In a sense, it would be similar to this period here, where we had a breakout attempt that ultimately fizzled out here in late 2018, and we saw the market show this pullback here. So holding the Dow above 28,538 is bullish. Failure to do so would be a sign of a market running out of momentum. Now, as mentioned weeks ago, don't be surprised to see markets trading at or near all-time highs by the time we see the next public holiday, which is September 7th. In fact, we can even see as far as S&P 500, this has already come true, because weeks ago we were not at new highs. We were trading somewhere around here. And so in a sense, the market has already achieved that prediction, which is not a surprise, since that has been how the market has been moved over the last couple of years. Around major holidays in the US, markets have been moving to all-time fresh highs. Yes, it's a heavily manipulated market, but why fight the trend? Go along with the trend. Let's also be on the lookout for a potential move by the S&P 500, because if it too joins the NASDAQ in holding above 69.1 on the weekly, expect the momentum to actually pick up pace to the upside. Now let me draw the line that we've been looking at the last couple of weeks. It is this line here. And we can see as of this week, the market is moving about that line, albeit slightly. So we have to be careful here, because a reversal back below that line could actually be signaling a trap is being played out. So that backtest line could end up being an issue. But right now we are seeing the market net moving above the line. Now there's another line that we can consider as we go forward, but we don't want to put too much emphasis on any type of sell signal until the market confirms it itself. So we're going to have to wait for the market to show us that it is running out of momentum. Let's not anticipate this and start acting on it. But there's a line here. This blue line corresponds with where the market broke down in February. So if the market reverses around here back below these two lines, that could be enough for a substantial resistance and for a substantial pullback in the market. We have a similar line as far as the Dow is concerned. It is this line that gave us this break point. And of course, the line is well established since it connected to the lows of late 2018 and the lows of 2019, and even this low here in early 2020. Again, we break down here. We see a substantial pullback in the market. We come here, we show some resistance, and now we are pretty much trading on that line. So what the bulls need to do here is take the market well and above and beyond this level here to continue moving the Dow higher. Otherwise, again, as we've been pointing out, resistance here once the market, if the market confirms it, could be where the market starts stalling. Now, I would be, wasting a good example of what happens when a market tries to break out and fails. We can see here in the early part of 2020, the Dow did attempt this breakout here, and that breakout was not successful. It is this breakout here that we can see on hindsight started this major plunge in the beginning part of 2020. So let's watch out for that Dow monthly breakout, because the Dow needs to hold above its 2019 monthly closing high. Right here, it needs to hold above this level if the market is to continue higher. Now, speaking of any potential change to the downside. Now, as I've been stating, if you take a look at the daily charts, number one, a lot of the daily charts are trading above 69.1, which might explain why the market is not going down day to day over the last couple of days. Also, more importantly, if there's going to be any major sell signal in the market, it's going to be down the road later, because this line would have to break. At the very least, this has to break before the markets can go lower. It's another way of saying that as long as we are trading above the line, net, the market is stable to bullish. We can see the same thing on the daily of the S&P 500. Really, there's no major break until we clear down and break below this line on the daily, which is the daily RSI's low. Also, let's not forget the market is trading well above the 50-day moving average. So even a pullback to the 50 and back above it would signal a stable market. And that would be a healthy pullback if that's how it plays out. In other words, really jumping to conclusion that the market can't go higher is very premature, because we haven't, as of right now, seen any signs of a major breakdown. If we take a look at the NASDAQ, we see a good example of why we need to wait for a major break if the market is supposed to go down at some point. And at some point, yes, the market's going to see a major sell-off at some point. That's a given. The question is when. So we can see a break here was the major sell, the major trigger, and this took place here. So if we're going to see a similar situation, the market has to break this RSI lows line first and foremost. And this is the NASDAQ daily. Now we're going to switch gears a little bit and we're going to take a look at metals. We can see that GLD has a future buy point on the weekly if it can move above the recent weekly closing high at 190.81. That would be the level to watch for a potential new momentum breakout if it can get there. Take a look at GDX, And on the weekly, it also has the recent weekly closing high as the next potential trigger breakout buy level, and that is at 42.94. If we take a look at silver, we can also see that silver has a potential to break out if it can clear the recent weekly closing high, and the level to watch here for a potential breakout is at 26.19. Now let's also take a look here and consider gold index proper. Take a look at what the potential breakout level, if it decides to break out and wants to go higher, that's the level to watch for a breakout signal, and that would be the recent weekly closing high, and that is at 2028.00. Now staying with weekly charts, we can see that crude oil, after a major plunge in the beginning part of the year, has stabilized. So this was a massive plunge, but we can see over the last couple of weeks, net we've been trading in this tightening range, which we can say is constructive. Now the question becomes, what is the next major move? Is it going to be a movement above that range and well above it, or is it going to be for a break back lower if it breaks below this range? Time will tell. But if we take a look at a 5-year weekly chart, we can see that this is also an area for potential consideration of resistance, in the sense that the RSI is coming back to test the top side of its weekly RSI highs. So connecting the highs here and here, we are trading exactly around where the red line is. So if the bulls are going to take over here and push it beyond current levels, the RSI needs to clear that level. Resistance of the RSI around here would confirm this could be a potential area for a turnaround lower. If we take a look at crude oil from a long-term monthly chart going back to 2012, we can draw a line as such, which is a simple line connecting recent multi-year RSI lows. It also gives us the break level, which is here, and we can see that the market is trading exactly around that level as of this monthly close. So we are getting close to the end of the month of August. So this monthly chart could also be guidance. If we can clear this red line, that's a bullish. That would push things to the upside. Resistance around here, of course, would suggest a pullback and a potential test of the recent monthly closing lows or the recent intraday lows. If, again, let me emphasize this, if we end up seeing a major RSI resistance around where it is trading right here. So in other words, if the bulls are going to continue pushing prices high, the RSI would need to clear this backtest line on the monthly. And again, this is for crude oil on a long-term monthly basis. A quick look at global markets as a whole. So the entire global market, we can see that the VT, the Vanguard Total World Stock ETF, is also doing what the S&P 500 is doing, which is moving above recent monthly closing highs from early 2020. So this is a fresh all-time weekly closing high. As long as that breakout is intact, this is a good sign that the bulls are keeping the market stable to outright bullish. At some point, failure to hold above this level would be in itself a sell signal. We can also draw a line similar to that of the S&P 500, which is this backtest line. You can draw it this way. This could be a challenge if the market chooses to show resistance. Again, all the bulls need to do is keep this above the red line so this upward trend can continue. We can see the Canadian market almost similar to that of the Dow, in the sense that it has yet to break out to fresh all-time highs, but that could come in the months ahead. In the meantime, the Canadian market would have to contend with this uniformity line, where we see a break this break was this major plunge, this drop, this big move in the early part of 2020. And so essentially the RSI has come back to test that level. And it doesn't mean the market has to stall here. It just means that if it can work its way above this red line, then we continue grinding to the upside. Those who are looking for a turn in the market lower would like to see this stall around here and start pointing down. Just like the Dow and the Canadian market, we can see the Nifty also not at its all-time highs, but then again, it could get there in the coming months. Let me just share with you some challenging areas. It's the same areas we've been watching, which is this breakpoint of the highs of early 2020. So this is potential resistance number one. I say potential because the market can clear above that. We've seen it do that with other markets like the NASDAQ and S&P 500. And also we have an RSI topside potential resistance line connecting the highs of the 2-year weekly RSI. Again, connecting the highs here from August 2018, the highs of January this year, and coming in contact right now. So what the bulls would want to do here is clear these two lines to give this market an opportunity to take out and test recent all-time monthly closing highs. If the RSI goes on to stall around here, I would say there's going to be some type of a sizable pullback from current levels before a reset and a potential try. Just because it experiences resistance doesn't necessarily mean that it can pull back and then go higher. That's also a possibility that it could be that it takes its time back to new highs. We shall see. Now, on the daily though, I do like the fact that we have this flat moving average here. And we see that there's been some recent price movement above this range. So there's a movement above this range, which we can say net is a breakout. And also we have a nice crossover between the 50 and the 200-day moving average. So that crossover momentum net, in my opinion, does look to be pointing to the upside. We also have recaptured the RSI 69.1 on the daily. So day to day, even the Nifty looks to be stable to bullish. As far as Bank Nifty is concerned, this is the line that we were drawing for a potential resistance or movement above that line. So first, let's explain where that line comes from on the Bank Nifty weekly. This was the break line here. And of course, we know we go into a major plunge. Huge. Anyway, we take that information and draw our uniformity line, which is my own original concept. Links are going to be in the description. So there was a line here. And you can see how that line did act as short-term resistance until this past week. Those resistance here and here. Now, this past week, we did go ahead and clear that level, which is exactly what the bulls wanted to see. Now, that's the bullish scenario. Let me share with you, similar to that of the Nifty itself, we take the RSI topside, and the RSI topside is coming to a potential resistance area right now, as you can see. So on the weekly, we do need to clear this blue line if the Bank Nifty is to advance beyond current levels. Short-term resistance around here, that means that we pause as far as week-to-week action is concerned, and we see either stability or movement to the downside in the short term. Net, we can also say, because we've moved above the 34-week moving average, net moving above the moving average here is a net positive. Let's take a quick look at the cryptos. Quick look just to capture the sense of what's going on here. Here's where BTC is trading at 11,503. And it's going to be a quick one here. What I would say is now we have a new level to watch, which is the recent weekly closing high. I would use that as a breakout trigger to watch, as a breakout level, a reason to be a buyer on a short-term basis if Bitcoin can clear the recent weekly closing high. and that level is at 11,917.97, which is the weekly closing high from about 3 weeks ago. So that would be the next breakout trigger point in my opinion. As we've been pointing out, on the monthly is where I see potential for struggle or even a breakout possibility. And it is this line where there was a break point. So this was a major break in early 2018. And so essentially what I've been saying over the last couple of weeks is this is the level to watch on a big picture time frame, because Bitcoin would have to clear this line here. The reason why I say this line is critical because it happens also to be around RSI 61.8 on the monthly. So what the bulls need to do here is push it above the recent weekly closing high, keep the RSI above this level if BTC is to continue to the upside. Otherwise, as we come to the end of the month, if we show monthly resistance and we are pointing down month to month and showing resistance on the red line, chances are this sets the stage for a pullback as far as the crypto market is concerned. With about 40 minutes to go in the US market this Friday, this is Eric Muathe with Muathe.com. Love light, light love. Namaste.